So Sunil, if you have any doubts, you can ask your doubt first, and then we'll start.
No, uncle, like no doubts as far, uncle. You
Okay,
explained me everything yesterday.
fine. Okay, 1 second. Let me share my screen. So, can you brief me what all things you know so that I can start accordingly?
Okay, uncle, first I know like what is technical analysis and fundamental analysis. Not fully. I
Hmm.
just saw a video of 45 minutes and that's all, but I'm not really confident about those topics. Only I know like how to this one. Then price action theory, that one, I just wrote down that one. Okay. Price action theory, and then yeah, strategy, trend trading inside bar, and then retracements, and
Hmm.
then those reversible, then breakouts and breakdowns. How to find those? Then what kind of trends are there? That higher low, higher high, and lower low, lower high.
Hmm.
Those and market structure and graph. Then demand and supply. That one.
Okay. So, first of all, do you have the idea about the market structure? Do you know how the market structure looks like?
No, uncle. I have really no. I don't know the idea, uncle.
Okay, so let's start with that first, market structure, fine, and then we'll continue after that. Okay,
Okay.
second. So you know about exchanges, primary market, secondary market, these things you know.
I've just gone through, uncle, but in depth, I'm in depth. I don't know that much.
So we'll start with that.
Okay.
So we have two types of market in India, right? Primary market and secondary market. Okay. So primary market, any idea about primary market? What is that?
Like, first time when the company is going IPO,
Right. So
like
first
first
time,
time.
uh, so so whenever a company needs money, right? They may need to expand their business, or they may need to clear their debt, or for any purpose. If they need that money, then they will come up with an IPO. Okay, so that's all will happen in primary market. So as you know that there are certain IPOs which are currently on, right? HDB Financial Services, Kalpataru, and so many are there, right? So right now they are in primary market. So once they get listed, then they will be listed in secondary market, right? So in primary market, there is a limit to every stock, right? Some stocks may have a limit of 15,000.
Yes,
That
yes.
like it happens in lot size, right? And some IPOs will be SME, small and medium enterprises. So they may have a higher lot size. Maybe in one lot they will charge around 1 lakh rupees, right? So there are certain IPOs with respect to SME as well, right? So this is
Yeah.
how they will plan in primary market to because they need some kind of money to expand their business or something like that, right? So once they get listed, they will list in secondary market, and once they list in secondary market, at that time we don't need to buy in lots and all, right? We can buy as per our requirements, or whatever money we have, based on that we can buy in secondary market, right? So this is the basic concept of primary and secondary market. Okay, and then we have exchanges, right? So we have two exchanges, NSE and BSE. So this you know, right?
Yes, uncle. This one.
So you can trade whether in BSE or NSE. It's up to you. There's not much difference in that. Only sometimes there will be a difference of zero point 0.5 paisa or 1 rupee, something like that, right? But anyway, it depends on you which exchange you want to trade. I normally trade in NSE. I use NSE for trading. Okay, and then Demat account you already know, and so you know about the prices: open price, high price, low price, and close price.
In that candle, uncle, that open shadow and then wick those one, uncle.
Yeah, there are four prices actually. On each candle, there will be four prices: open price, high price, low price, and close price. Whether the candle is of 1 minute, 5 minutes, or 10 minutes, whatever it is, the four prices will always be there. Okay. And apart from that, there's a thing called volume. Okay. So, any idea about what is the volume?
Like, not that much, uncle. The number of transactions which has been taken
Uh,
place.
because see, we have in market there are two types of traders, right? Buyers or sellers. Right? So the volume is a mix of both buyers and sellers. We cannot segregate whether they are the buyers or the sellers from the volume. But if we see the candle, then we can take a bet whether they are buyers or sellers. If the candle is green, right, then we can see that mostly are the buyers, and if the candle is red, then we can see that most of the traders are sellers, right? Based on the candle, we can decide the which is a buyer and which is a seller. Okay, and then we have bid and offer. Any idea about bid and offer?
When the seller he's selling when in case if this is stock when I'm selling a stock, so I'll put a particular price so that which I'm bidding for.
So bid is basically a price at which buyers are interested to buy, and offer is the price at which the sellers are interested to sell, right? So these things, I'll show you where you can see this. One second. If you go to NSE India, have you seen this site earlier? NSEindia.com. NSEindia.com. You know.
Yes, yes, Uncle, I think this.
So here, what? Let's say I want to see the bid and offer for HDFC Bank. Okay, I'll click on that, and then here I can see this is called order book. Okay, so this is order book, right? So here you can see the bid and ask. Earlier they used to call it offer, now they are calling it as ask. Okay, so they've changed the name ask. So this is a bid, this is the ask. So this is the price at which buyers are interested to buy, and this is the price at which sellers are interested to sell. Okay, so whenever there is a match in the prices, at that time the trade will happen. Okay, and these are the quantities. Here you can see that, right? And these are the total number of buying and selling quantities,
So
right?
like what are these, Uncle? These are any particular indexes or stocks?
This is a stock, HDFC Bank.
Yes, yes, yes. Okay.
HDFC Bank, one second. HDFC Bank Limited, right?
Okay, okay.
So for any stock, if you want to see, you can just write the name of the stock here and then you can see, right? And even in Zerodha also you can see this, like in your Demat account. If you add the name of the stock in the watch list, you can go to market depth, and there you can see that this information. Okay. One second. Is the video recorded, right? Recording now.
Yes, yes, Uncle.
Right. Okay, so this is clear the difference between bid and ask.
Yes, yes, Uncle.
Okay, so apart from that, there are certain trade information also which is available here. Okay, the total number of traded volume, which is in lakhs, the traded value, total market cap, and the free float market cap. So, do you have any idea about what is the difference between market cap and free float market cap?
No, Uncle, I don't
So,
have.
total market cap means total number of stocks, total number of equity shares. Okay, and the one free float market cap means the one which are there in the market. Like let's say they have a total stake of 100%, right? So let's say they have sent 90% to the market. So 90% we as a public can buy and sell, and 10% will remain with the promoters.
Between
Promo-
shareholders and etc.
Promoters or the board of directors or the management, right? So they will have that 10% and remaining 90% will be there in the markets, so that normal public or normal traders like us can buy and sell, right? So this is called as free
Okay.
market cap. Okay. And then we have 52-week high and 52-week low. So these two prices are very important in stock market. 52-week high and 52-week low. 52-week high means 1 year high, because in 1 year there are 52 weeks. So
Yes.
52-week high means 1 year high, and 52-week low means 1 year low. Okay, fine. So here,
Just 1 minute, Uncle.
uh,
Come.
okay.
Yes, Uncle. I'm back.
Okay, 1 second. Let me put my laptop on charger. It is take a second. Okay, so 52-week high and 52-week low, these prices are very important. So these I will explain you while we will discuss about the strategies later, right? How to use these
Okay.
strategies, okay? And then we have upper band and lower band, means the stock can go maximum to this price in a single day, and this is a price at which it can go towards the downside in a single day. So this is a band they have decided. So for some stocks, the band will be plus or minus 5. For some stocks, it will be 10 plus minus 10%, and for some stocks, it can be plus minus 20%. And the stocks which are B grade stocks or C grade stocks, for them, the band will be like plus minus 2%. Right? So band means the maximum price it can move and towards the upside, or the maximum price it can move towards the downside. Right? Okay, it's clear.
Yes, sir. Yeah.
So tick size means the stock can move in a multiple of 10 paisa. Right? Like if the price is 2000, then it can go to 2000, point 1, point 2, point 3, like that. It will not go like 0.05 or 0.15 or 0.25, like that. It will not go. It will move like 0.1, point 2, point 3, point 4, like that. Okay. So that means tick size. Okay. Find this clear?
Yes, sir.
Okay. We'll move back to slides. So next is we have two types of market, bull market and bear market. Actually, three types of market: bull market, bear market, and sideways market. So do you have any idea about these three types of market: bull, bear, and sideways?
Like this one sideways, I'm not sure, uncle. Whale market is also called as. Is it also called as whale market, uncle? Because like bull market means it has high potential, bear market means it has less potential, and whale market means it goes sideways. The price goes sideways, neither up or neither down.
Yes. The bull market basically means uptrend, bear market means downtrend, and sideways means flat consolidation, right?
Yes,
So
sir.
in sideways, any stock or market can form a range, and it will start moving in that range. So there is no fixed time period for what time the market can go in sideways. But these days, for around 3 4 years, we are seeing that 6 months is normally a bull market. Okay, the period is 6 months is the bull market, 3 months is the bear market, and 3 months is the sideways market. This is what we are seeing for around 3 4 years. But if you go back way back in 2008 or 2007, at that time the bull market used to be only for 2 to 3 months, right? Earlier, but now it is approximately 6 months.
Okay, okay.
Okay. Okay. So this is fine. Why we want to invest? Because we want to start with small fund, high liquidity. We should always trade in high liquidity. So which type of stocks you are trading?
Only small cap stocks in this one, uncle. Small cap stocks and large cap stocks.
Small cap and
Large cap.
large cap. Okay, fine. So if you have experience, you can choose even a small cap and mid cap stock also. It is up to you. But the one which is a beginner person in trading, he should start using with only the large cap and mid cap only. Small cap we should not touch because they are highly volatile.
Risky.
Risky, highly
Okay.
volatile, right? If a bear market starts, they can go up to minus 60% also. Right? So they are very volatile and risky. Okay. Mm. Any idea about FPO? FPO?
No, uncle. No, no.
Follow on public offering, right? So this is being done by those companies which are already listed in secondary market. Okay. Like IPO is for the companies which are not listed in secondary market, right? FPO is for those companies which are already listed in secondary markets. Okay. So how it is different from IPO? So it is different from IPO, which is when a company offers its shares to the public for the first time, right? Then we call it as a follow-on public offering. Okay. Okay. So now instruments to trade. So any idea about how many instruments we have to trade in Indian stock market? So these are the ones. Right?
Like,
In in stocks, we have, I've just listed few of them like HDFC Bank, TCS, Reliance, SBI. And in index, we have Bank Nifty and Nifty 50, which are highly liquid. Apart from that, we have other indexes also, like Sensex, right? And then mid cap, and then Fin Nifty. Okay. But these are the two which are highly liquid, right? And then we have currency, like Forex. We have three pairs, uh, GBP versus INR, JPY versus INR, and USD versus INR. So here also you can trade, but these are traded only in FN, future and options. Okay. Then we have commodity like gold, silver, crude oil, natural gas, right? These are the commodity which you can trade, but this is again available in FN, future and options, right? And then we have ETFs like gold, silver, bank bean. ETF, any idea about what is the ETF?
I know, uncle, like uh,
Yeah.
exchange traded fund.
Yes. So if you want to invest in Nifty 50, Bank Nifty or gold or silver, then you can go through ETF to invest, right? And then we have mutual funds. So any idea of what is a mutual fund?
Yes, and like example like Parak Parak Mutual Fund, Axis Bank, and then
Mm.
Quant large cap and Quant mid cap. Those
Yes.
local mutual fund.
So any idea how they work? Like
Okay, there's a fund manager where we can do a lump sum and also an SIP or do an SWP. He's the one who takes care. And there's something called expense ratio, and it will be somewhere up between 2%, less than 2% or 0.5%.
mm. So see, mutual funds are having more expense ratio as compared to ETF. So if you want to invest, then it's better to go through ETF route. Mutual fund will be having more expense ratio like 1 to 2%, and ETF will be having like 0.1 or 0.2 like that. So they have a very less of expense ratio here. So i- if you have an option, you can go through ETF route like gold, silver, bank bean, Nifty bean. It's better to go in ETF. And if you want to invest in any other mutual fund like large cap funds or small cap like that, you can buy the mutual funds, right? So the fund manager indirectly invests in stocks only, correct? So, while investing in mutual funds, you have to see the portfolio of that mutual fund where they are investing, like large cap, small cap, mid cap, or some kind of debt funds are they are investing, right? So, all those things you have to see before you buy the mutual funds, right? Fine.
Yes, sir.
So these are the timings. 9:15 to 3:30 is for our stock market. Currency is from 9 to 5 p.m. and commodity is from 9 to 12 p.m. Okay. So there are many traders who trade only in currency, and there are many traders who trade only in commodity as well. Okay. Because they have a long time frame, right? So they want to trade starting from morning till night. Fine. So how stocks are segregated? So these stocks are divided like types of stocks: large cap, mid cap, small cap, and penny stocks. So they are segregated based on the market capitalization, right? So how you calculate the market cap? You calculate the market cap stock price into number of shares. I have shown you that na free float of market cap, right? So those are the number of shares into stock price. So if you do this calculation, you will get the market capitalization. So for large cap, we consider is if it is greater than 20,000 crores, we call it as a large cap stock. If it is between 5,000 to 20,000 crores, we call it as a mid cap, and likewise small cap and penny stock, we have to segregate based on the capitalization, right? Right. So there's a normal rule. So this is like a normal rule of for a person how to invest. 50% it should go in large cap, 25% in mid cap, 15% in small cap, and 10% penny stock. So this is how you can invest. But if your risk appetite is more, you can change this percentage, right? Because large cap they are having low risk. Large cap is low risk. Mid cap is having the moderate one, and small cap and penny stocks are high risky. Similarly, they are high risky, but they will give you more returns also, right?
Yes, sir.
These are low risky and they will give you less return. So based on your risk appetite, you can change this percentage. But this is the ideal scenario. 50%, 25, 15, and 20. This is the ideal scenario. Okay. It's clear?
Yes, sir. Yeah.
Yeah. So dividend, any idea about dividends?
Yes, sir. Like dividends means the company's profit is being given to the shareholders.
Hmm. Right. So there are many stocks which are giving dividend. You can also invest in dividend stocks, right? Okay. Now there is a weightage. So any idea about the weightage, how the stocks are weightage in Nifty 50 and Bank Nifty?
Not, no, uncle, I have no idea about that.
Okay. So see, Nifty 50 is is an index, right? So Nifty 50 is having a basket of stocks, right? So they have divided the certain weightage based on the market cap and based on the sales profit and all those things. So top is the Reliance Industries. So it is having around 10 to 11% of weightage in Nifty 50. Likewise, TCS, HDFC Bank, ICICI Bank. So these are the top 10 which are having the highest weightage in Nifty 50. Okay. Similarly, in Bank Nifty also there are certain stocks which are related to banks only and they are listed in Bank Nifty. So whenever these stocks move, likewise the index will also move. Okay. So the index is dependent on the stocks. So this is how there is a movement in index. Okay.